Hey, what's going on YouTube? So today we're going to be taking a look at my M1 Finance dividend investing portfolio. So let's hop over here on screen and not waste any time. So we're actually going to kind of just do a more breakdown version in today's video. In other ones, we love talking about dividends, and we'll talk a little bit about dividends in this one here today too. But let's kind of give a nice little update here and see how the portfolio is doing overall. Let's take a look at the performance on individual stocks that we have here as well. So you can see here our current value for our portfolio is sitting at $47,727, which is really nice. Pretty excited about how it's been performing. The last day since recording this, it's down about $80. For the week, we're up about $376. For the month, we're up almost $1,380. For the quarter, we're actually up about $2,100, 110 of which has been dividends. And then you can see here in the last year, $7,500 in total gains. That is including $385 in dividends. And in our all-time right now, we're sitting about $8,381 in total gains, 451 of which has been earned dividends as well. Now, also too, I do like to show this, making sure it's on screen here. So I started this portfolio with $100, by the way. So, for a lot of people seeing a higher number, don't worry, you can get started with a small amount and keep on investing. As long as you are staying consistent, you're going to continue to grow. As far as unrealized gains, because some of the stocks I've actually sold before have earned me some nice gains. Unrealized, not including dividends, we're sitting at $6,912, which is about a 17% increase overall. So let's take a little bit of a deeper dive and see kind of where we're sitting at here with each stock. We got 21 holdings here in total. You can see right over here, so it's currently set up with our value. So Apple is our biggest holding here on this this overall portfolio. We have 40 shares. We just recently hit 40 shares, which I'm really excited about. Obviously, for being a pretty large company, that's a decent amount of shares purchased at about 4,700, and you can see here 5,800 is where we are currently valued at. So we have gained, if I sold today, not including the dividends, over $1,080 that we made from this fund. So that's really exciting. That gets me excited to keep on investing. So let's kind of take a quick look and see some of the top companies that are performing on this portfolio. So we have stuff like Discover and Ally, both have done really well for us. Obviously, if I knew more, I would have obviously invested way more. We have about 10 shares in Discover, and we've grown over 100% on this fund. Ally, we got about 50% on this growth. Tesla, even though it's kind of been teetering around 650 or so as of this recording, we have still over a 30% gain on the stock itself. So, if you believe in a company long term, if you like the way their numbers are looking, PE ratio and everything else as well, and you want to be invested with them, obviously it's not the best to buy at the highest, but if it goes down, keep on investing with them. Dollar cost average, it could still be really worth your while if you stick with it. Because I see a lot of people investing, and then the market goes down and then they sell, and that's obviously the worst time. And I'll show you actually one great example of this here in just a second. We got also Google here in the top 5. We're almost at 30% with them. And then to round out the top 5, we have Facebook, actually. Surprising to most people. Now, I know Facebook and Google and Tesla, even though they're in a dividend investing portfolio, they're not currently paying dividends. I've talked to people before about this, where it's either one, if they start paying out dividends, that's going to be great. And if not, when I do start wanting to use these dividends from this portfolio, I can sell these off for the profit and then use that to buy into dividend paying companies. Now, if we go back to the other side here, we can see, so I only have one stock in my overall portfolio that's actually in the negative right now, and it's obviously pretty substantial. We're down about 10% on Airbnb. You can see we have about 23 shares of this stock right over here. Average price is $159.92. I think it's at $142, give or take, right over here. And you can see, we have a decent amount in this stock. Obviously, it doesn't pay out dividends either. But again, if in the year's time it creates a lot of cash flow and it is very profitable, hopefully one day they can add that on there. But I've still been buying in, even though the stock has been down. If anything, I actually like buying when a stock is down. I was doing that with Texas Instrument. They're finally back in the green for me. News Residential has dropped actually for us, and then Lockheed Martin is also in the bottom here. And then to round out the top 5 at the bottom on my portfolio, we have NextEra Energy. We're at a positive $4 or 4.34%. But this stock actually, if I go back to my portfolio, wasn't performing very well in my overall stuff here. So let's kind of take a look here. So you can see, let's break it down by like the quarter. So you can see there was like this time period here where it just takes these really big dips, and so it was kind of going up and down for a long time. So I was actually buying more into this while it was going down, just because I want to be invested in this company for long term. So even if it's, obviously lower than my average share, I want to buy more to dollar cost average. But now it's back in the green. So it's really nice to see, at least going back up for a while. Airbnb on my portfolio has been down for a significant amount of time. Let me see if I can take a quick look here. So, I mean, obviously you can't really see it exact, but you can see like big drops going on over here as far as overall value. So yeah, 159 is my average share price, 143 is the current price. So it's not too far off from one another, but let's see, how has Airbnb been doing? So let me just switch over to seekingalpha.com here. So you could see here, so obviously the peaks were right over here, over $200. This is when I really started buying into a lot of Airbnb, was in this time period right here. So from like May to June, I've been buying a decent amount at this price point. It's obviously dropped as low as like $130, I believe, all the way to 121. But I kept buying just because I want to be consistently investing in the companies, obviously regardless if they're up or down for a short period of time, because long term, the goal is to, have these companies and hold on to them, and obviously earn the dividends once they can start paying out dividends. And then keep in mind, companies like Apple weren't paying out dividends for a long time, and then they eventually did. So if you owned stock before they paid out dividends, you still got the dividends once they started. So that's a great thing, because you got all that amazing appreciation on the share price, but then you start earning dividends on top of that. It's a beautiful, beautiful thing. So I also jumped over to trackyourdividends.com here. Now this isn't updated with the deposit I just put in, because I just put in a deposit this morning for $700. So we did 11 buys. So we can see here really quick, we got like a little into Microsoft, a ton into Apple, just because of the way everything fluctuated. I didn't intend for that much to go into Apple, but nonetheless, it's still bought in a good amount, even though they're close to their 52-week high. And I tend to hold off on companies when they get so close to their 52-week highs. Like I mentioned, I actually tend to buy more on the companies that are on the downside of my portfolio, and then hold off on the ones that are hitting their highest, because eventually, they come up and down, and that's when I'll buy. You can see we did a little on to ADP, Costco. They were getting to their ex-dividend date, so I just put a tiny bit extra because I want to hit over, I think 4 shares is what I have now. So just as an example, $80 at a share price of $423 only gets me about 0.188 shares. So that's about almost 19% of one share is what $80 does for me on that, which is crazy. But nonetheless, we're still getting money in there. You can see we got Lockheed Martin, Amazon, Home Depot, Google, Square. I put a little bit into Square because they had a pretty big drop here. Airbnb I put in because we're still down, and then Ross got about 71.20 in there as well. But go back to this. This hasn't had the newest update on there yet, but it wouldn't change these numbers too dramatically. You can see my yield on cost right now is 1.24%. And for some dividend investors, obviously that's not enough, but I don't care for the dividends today. I like them, in the next 14, 15 years when I want to use this money. So my hope is that the dividend increases that happen with some of these companies is dramatic enough to help me get to that 4, 5, 6% dividend. So here's a great example. I own Ally Bank. Had them for quite some time now. So if we go over to the dividend news, you saw I'm like 50% up on there, which is great. But then what was really cool too is they actually raised their quarterly dividend by 32%. Now this is probably not going to be a common thing with Ally, but it's still a huge impact on here. So they went from 19 cents a share all the way to 25 cents a share. So that's pretty significant. For the amount of shares we have, it's not that much of a difference. Because if we go here, we can see, so with Ally Bank, we own 26.61 shares. So just as an example, so at 19 cents a share, we'd be getting $5.05. So if we go this other route, now we're getting 25 cents a share. we're getting $1.65, right? So we're getting a whole $1.60 more, and I did nothing. I did absolutely nothing extra and got this 32% raise. Now, if we only imagine if we had 100 shares, 1,000 shares, or whatever number we get to in the future, and a company increases their dividends by 30%. Like I said, it's not going to be a common thing, but it can happen. Or over the course of a couple of years, 10% here, 8% there, 12% here, can add up to a point where you're going to essentially get 30% more on your dividends than you did a couple of years ago. So I love the dividend increases for that reason. And so like I said, 6 cents per share is not that dramatic, especially at only 26 shares. But hey, I'll take that extra $1.60 a quarter because see, $1.60 per quarter times 4, that's $6.40 more that I'm going to be making. Now here's a really cool thing when you really think about it. $6.40 is more money than I was expecting to get from this share from these companies, or dividends, I should say, from this company. And now I can take that money and reinvest it back into either that company or others into my portfolio to hopefully continue it to grow. And that's what compounding interest does. And it is a beautiful, beautiful thing. So hopefully that will go and continue to grow on top of that. But you can see here, so that's why the yield is a little lower for me now. Hey, if I'm wrong, you guys can follow along and see how that ends up playing out for me. Because I just like sharing this stuff. This is legitimately what I do on my off time, is just kind of look at these numbers. So I figured, why not record these, share them with you, so that way we can kind of see this stuff changing in real time. Now, for somebody who maybe wants to get into, let's say, Ally Financials, if you bought in today, the yield is about 2%, but because I bought in at a different time, my yield is actually closer to 3%. So I'm getting a whole 1% more in dividends just because of the cost that it costs, the cost for me to get in versus the cost for somebody else to get in today. So that's what I love about investing early and as often as you can, even if it's not a lot. I mentioned earlier that if we go ahead and look at the beginning of this portfolio, I put in that 100, and you could see it's just slow amounts. I think I was doing $10 a week. Then I bumped it up to 20, then 30, then 40. Then I think it was like $50 to $60 a week, then $70 to $100 a week. And then it just started continuing to grow as I got more confident, more comfortable. And, I was trying to earn a little bit more on the YouTube side hustle stuff and a whole bunch of other stuff. And then once that money started coming in, I was feeling more confident in investing it. But I don't think most people are going to be like, oh, well, I'm going to just go ahead and start with $1,000 a week, investing. I don't think that's the case for most people, and maybe it's not the best way to go. But I think if you start off small and start moving forward, that can have a huge impact on the way this goes. So if we look at so I'm in my overall right here, and you can see out of all of my slices, you can see that my tech and my growth, the first and second ones and the slices here, are obviously the best performing. We have gained almost 2,200 on the tech bubble. I was going to say tech bubble, tech pie, and then 2,100 in my growth pie. Now, some of these other ones have lower dollar amounts as gains, and actually the real estate one is still in the negative, but that's because of Airbnb. So hopefully when they get back to, even if they got to their 52-week high, it would take our real estate and everything else up quite significantly, actually. I think I would be up like 20% or so, 20-30% just on Airbnb alone. But anyways, kind of going over these, you can see financials were up almost 1,800 overall. Industries and energy is starting to come back. We had some downturns, like I mentioned. I was investing a little bit more, and then our retail has kind of been a little steadier than everything else overall here. Although you can see that even though our retail stocks overall pay actually a better dividend yield, their performance hasn't been anywhere close to where the growth and the tech have been. So our tech, just so you're aware, has Apple and Microsoft in them, just those two, and then the growth are Google, Amazon, Tesla, and Facebook as well too. So just kind of how those ones are played out. Our retail ones have Home Depot, Ross, Costco, and Starbucks. So Home Depot and Starbucks pay out a healthy dividend. The Ross and Costco ones actually pay out a fairly low dividend. Let me actually see what they pay out right now. So Costco, if you were to invest in today, it's 0.75, mine is 0.89. And then Ross, right over here, pays out 0.94. If you invest today, mine is 0.98 because, again, I've invested a little while ago. and I don't know if it had a dividend increase since I've actually owned it, but yeah, so those ones don't pay as much, but Home Depot for sure pays a really healthy dividend, and so does Starbucks, and I do like those stocks definitely. Industries and energy, we have in here, we have Next to Air Energy. We got some Lockheed Martin in here. We have ADP, and then we also have Texas Instrument. This one's the newest one to the pie. I added it all the way back in February of 2021. So it's only been in here for a little while. Hasn't performed the best. As you can see here, it only has a gain of $27. That's including $7.95 of which has been earned dividends. So a little bit lackluster in its performance, but long term, I can see some really great things based off its numbers and its books. Everything I was doing research for when it comes to that, it's looking really good. ADP has been performing fairly well overall since we've had it. And then in real estate, you kind of saw we had Airbnb, we have Digital Realty Trust, and then we have NRZ. So NRZ is a pretty popular one with a lot of dividend investors. This is the only one that has a significantly high dividend yield. Everything else is very low dividends because I am expecting high dividend increases, where this one, I actually really like some of the model changes that they've had over the years, and have been invested with them for a while. So my average price is $9.27, and then you could see their yield, I believe, is around this number here. Sometimes they're off on these sites. So 7.74 dividend yield, and you could see here we have 102 shares of this company. So quite a significant amount of shares. They're currently paying out, I think, 20 cents a share. Ideally, I think they're going to be bumping up to 25 cents a share sometime in the near future. So that'll be really nice. And then the next sector here you can see is financials. So this is where I keep Square, even though it is kind of a growth company. I did like it in the financial sector here. We have Ally, Discover Financials, and also Visa, which is a very silent heavy hitter, in my opinion. Like, they haven't done the best, but they've definitely been just chugging along with the portfolio here over the last year and some change since I've been investing, because we've been investing since January 23rd, 2019 on this portfolio. If you would like to, sign up for M1 Finance as well and have a portfolio that looks like this, check out the link in the show notes down below. They have a bonus for you to get $30 to be able to sign up and have your first deposit go in, and then you could use that money to invest in any of the companies you want, similar to mine, or if you wanted to have your own type of setup as well, you can do that too. Now, one of the big things that I always like to tell people all the time is to keep on learning and growing when it comes to getting started with investing. So I want you to actually check out my next video right over here so you can do just that. My name is Dennis, and I'll see you in that next video.